When it comes to Tesla, us investors already know that quite often there are a number of Wall Street analysts that are particularly negative on this position. Whether they just don't like Elon Musk, they think that Tesla are trying to solve the impossible and it's never going to happen, whatever the reason. Quite often, I think the analysis is quite unjustified. However, there is one particular analyst that is very, very bullish on Tesla and has been optimistic for a long, long time. That is, of course, Ron Barron, who heads up Barron Capital. Now, Barron Capital posted a fund performance letter at the end of March, but recently it has been posted to X and it's been doing its rounds. And this fund performance letter had a particular focus in parts on Tesla. And Elon responded to this with something quite exciting for us shareholders to hear. So anyway, you can read the whole letter if you want, but basically let me try and summarize the key parts that us Tesla shareholders care about. Now, the Barron Fund has held Tesla since 2014. Of course, sometimes they sell a little bit to take profit and whatnot, but they've been in the position since 2014, so now a decade. And the percent of total investments into Tesla across the fund is 29.3%. So as far as a fund goes, that is actually quite a large position in a single stock. And they were buying Tesla back at the split adjusted price of just $11.88 per share, which I can't even believe. $11.88 per share. God, I wish I was buying back then. But hey, hindsight is always a beautiful thing. Now, like I said, Ron Barron is a particular analyst that is extremely bullish on Tesla, and he has been very vocal about this a number of times on different interviews and different press releases and whatnot. And recently, he's spoken out in support of Elon's compensation package. I really respect this guy. He's somewhat of an older analyst as far as analysts go, but he has never shied away from understanding the technology. He completely gets it. He sees the vision. And quite frankly, his analysis is way more researched than some of these downgrades that I see, whereby people just say it's never going to happen. He recently actually said on a CNBC interview that he believes all cars will be fully electric in just 10 to 15 years. And he believes in the robo-taxi fleet as well. And he thinks that Tesla stock will 4x or 5x in the next 10 years. Now, personally, I think that could actually be a lot larger. I think we can go above a 5x in 10 years, especially as we have these big catalysts aligned. And if Tesla executes, that should take their valuation to new levels. Their market cap should grow intensely. But of course, that's not guaranteed. They still need to execute. In this letter, it says that the fund's 10-year investment into Tesla has caused an underperformance in this quarter specifically. But obviously, a 10-year period is quite a long period. And over that timeline, the Barron Fund has done particularly well because of Tesla as well. So this comes down to the whole short-term versus long-term. The short-term returns on a stock like Tesla versus the long-term are going to be very different. And that's why this stock is not for everyone. When describing the periods of underperformance caused by Tesla, Ron Barron and Michael Barron, who I guess is his son, I probably should have looked that up, but these are the fund managers anyway, they said in previous instances when Tesla shares have underperformed during a discrete period, they have shortly afterwards reflected the strong growth of the underlying business, and the stock has appreciated considerably. We believe this will be the case again, although we cannot guarantee it. They then go on to give an example of a period of time where the stock has done particularly poorly, it's declined, and then it's gone on to have really, really strong growth. So they've said that there was a big stock decline at the end of 2022, and this was due to Elon buying Twitter, people worrying that he was distracted and not focused. COVID was causing a weak Chinese market, which is an important market for Tesla, and US government policies causing problems as well. But then they've said that Tesla achieved loads and loads of their milestones because the underlying business doesn't always reflect the stock, and the underlying business was doing very well, and then the stock doubled in the next 12 months. So they believe right now, as they did back in 2022, that a lot of retail investors and just the market overall have concerns that are a little bit overblown. Like they've said there, they think that the underlying business is doing everything that it should be. It's growing considerably, and at some point the stock will catch up. So that's what they had to say. I always love to hear what Ron Barron has to say about Tesla. But anyway, like I said, this came out in March, so it's not new, but it got posted to X, and Elon said this: long-term returns on Tesla will, I believe, be exceptional. I don't think there's many CEOs that are saying things like that about, the long-term returns on their company, their stock. Some people get annoyed about this because, some people will say, well, this might be giving false hope, false optimism that may actually not be seen. I don't think that's the case at all. I just think he knows what's going on behind the scenes. He knows what work Tesla is doing, and he absolutely knows that if they execute what they're looking to execute, it could be massive. And I like this trust that he has in himself, this focus, this determination. I like it. That's what I want to see as a shareholder, because I'm literally putting my money into his business. I'm buying a bit of that business. So I want the CEO, I want the leader driving that business to be confident. So that was quite exciting. That was quite nice to hear. But there also has been a price downgrade on Tesla that we should discuss as well. I have seen some comments asking why I give time to talk about downgrades. Well, because I think it's important. I think it's always important to keep an open mind and question your judgment. See if any of these price grades actually are justified and warrant you thinking about your investment. Most of the time they don't, honestly. Most of the time it's a bit of a laugh and I'm thinking, what on earth's going on? But hey, what I'm trying to do on this channel is cover Tesla and Palantir every single day. So I am going to try and cover everything that happens or is happening around the stock as well. So this price cut came from an analyst called Tom at RBC, and I'll try and link the full video below, but just in the interest of time, I'm not going to watch the full video. I'm just going to tell you the key points. So he cut Tesla's price target that they had from $293 a share to $227 a share. So that is a $66 price decrease, which I would say is pretty substantial. So then that makes me think, why is he right now lowering the price target when we have other analysts like Ron Barron being so bullish? This seems to be quite different to each other. How can, what's going on? So of course, like I said, it's a 6-minute interview. I'm not going to play it all. I'm going to summarize what he says. He said that the future valuation of Tesla relies heavily on the robo-taxi business because the EV business, EV sales, cannot justify an incredibly high valuation alone. But they are reducing the price target because they now think that they are expecting a lower profitability from this robo-taxi business than they originally anticipated. And this adjustment apparently came from a reassessment using insights from the ride-sharing market. They also believe that other players will enter the market, the robo-taxi market, and it will be highly competitive and also highly regulated. He is predicting that Tesla alone could capture over 20% of the US market share in robo-taxis, but competition will come and it will include Waymo, GM, and Cruise. So my thoughts on this. Number one, I agree with the regulation part. I thought actually for a very long time that the regulations surrounding a robo-taxi business will be incredibly high, incredibly difficult, and will actually prevent this really taking off, or at least I should say taking off quickly. However, I've listened to many different analysts, many different people's opinions, and especially the opinion of Tasha from ARK Invest, and I am now way less worried about this than I was before. It's true what they say that Tesla is collecting vast amounts of data that show that Tesla's FSD, which obviously feeds into the robo-taxi fleet, is proving without a doubt that a car driving autonomously using Tesla's FSD technology is way safer, is experiencing way less crashes than anything else. Than human-driven Teslas, human-driven other cars, Waymo's autonomy, Cruise's autonomy, and so on. So I actually don't think that the regulation will be an issue anymore. Number two, he mentioned competition. I just want to ask what competition? Because I don't think any other companies are in a position to scale like Tesla are for a start. And with a robo-taxi fleet, if you're trying to take market share, you need to be able to scale. Oh, and actually one more thing, whilst we're speaking about Tesla, I recently saw, according to recent SEC filings, that the Uber CEO has now sold 50% of his shares. Now, I do believe this came from a pre-arranged trading plan. If that's not the case, do let me know in the comments below. But 50% does seem to be quite a lot. And a lot of people are saying that maybe this went through because he is now, he knows that the 8th of the 8th is coming up, the robo-taxi event, and he is worried about this direct competition that Tesla will have with Uber. Of course, a Tesla robo-taxi fleet would be in direct competition with Uber, and the fact that Tesla have autonomy and the fact that they have a scaled fleet and all these things, I do think Tesla will be able to significantly undercut Uber's prices, and that could be quite concerning for Uber. Having said that though, of course, there are many reasons why insiders of a company sell stock at particular times. But anyway, let me know what you think about all this in the comments below.